Good morning, students. Today we are going to solve a question from the topic of business structure in the paper number 1, business subject A levels. The statement of the question is analyze the advantages of a public limited company as a legal structure for a business. And here is the marking scheme. So you must have the understanding of the public limited company and you must have the understanding of the legal structure of the business, and the application that is required to put up in the answer is reference to the characteristics role of the public limited company as legal business structure. The first point in the analysis is the separate legal identity. The business is legally a distinct person separate from its owners, the shareholders. The company can own property, enter into contracts, sue, or be sued in its own name. If the business is taken out a loan, the debt belongs to the company, not to the individuals who own the shares. The second point is limited liability for the shareholders. So this is actually a direct result of having a separate legal identity. And what it means, shareholders are only financially responsible for the amount they invested in buying their shares. If the business goes bankrupt with the massive debts, the shareholders can lose the value of their shares, but their personal assets like their homes or savings cannot be touched to pay off the company's debts. The third point is raising capital through share issues. Because the business can split its ownership into millions of the tiny fractions, that is shares, it can raise massive amounts of the capital. And what it means, instead of relying purely on bank loans, the company can sell shares to institutional investors or the general public. This capital does not have to be repaid like a loan, and it doesn't incur interest charges also. The number 4 point is stock exchange listing. So taking the company public and listing it on the major stock exchange like the London Stock Exchange or the Dubai Financial Market dramatically increases its profile. And what it means, so it makes the shares highly liquid, meaning investors can easily buy and sell them at any point. This ease of trading makes investing in the company much more attractive to global investors, venture capitalists, and the general public. And how these advantages drive growth? The acquiring assets. So, with the massive capital raised from the issuing shares, the business can afford large scale capital expenditures such as buying property, building new factories, or investing in the advanced technology. Second is organic growth. This influx of the finance allows the business to expand its core operations naturally, organically, by opening new branches, entering new markets, or developing new products rather than relying on risky mergers or acquisition. Thank you so much.